Hello, everyone, and welcome to PhysicianEstate podcast. I am your host, Dr. Harsha Mule. I am the owner and founder of PhysicianEstate platform. I'm podcasting to you today from Kansas City, Missouri. PhysicianEstate is a physician-owned real estate platform directed specifically towards doctors in USA. We provide free resources and real estate investment opportunities for physicians. We facilitate physicians to make wealth and keep wealth. You are currently listening to episode 1 of PhysicianEstate podcast. This podcast is the first among a series of podcasts that are aimed at discussing the details of real estate syndications for physicians. In this podcast, we will discuss the basics of real estate syndication and the structure of a real estate syndication deal. Just to give you a little bit of background about myself, after graduating from internal medicine residency, it honestly did not take long for me to understand that there is a huge difference between being wealthy and being rich, and I decided that I wanted to become wealthy and financially free. I made a deliberate choice. Instead of buying into the extreme luxuries, don't get me wrong, I would still like to have all the luxuries if given a chance. I chose to make my money work for me and have my money make more money for me passively. I decided to grow wealth by investing into various asset classes. I went out looking for information to learn about multiple investment opportunities. In this series of blog posts, although I focus on explaining the basics of real estate syndications, I also elaborate on how I eventually ended up choosing real estate syndications as a major part of my investments. Well, what is real estate syndication? Let's say you want to buy a commercial property that is worth $8 million. It's a shopping mall or a strip mall that you see across the corner of your street. However, you don't have that kind of money or time or expertise to do it by yourself. So you decide to pool your money with the other investors like you to gather the required dollar amount. Now you have sufficient money to invest, but these high dollar value commercial projects, they usually have a lot of work involved. So the next step would be for you to find the right property, renovate it, manage it, and ensure its success. You need to find someone with relevant experience that does this for you. This is your point of contact person for the whole syndication project. This point of contact person or the team goes by one of the following names. They are called general partner, sponsor, fund operator, or syndicator. All the investors, including you, that are pulling the money into the project, you're called limited partners. So these are the two entities. One is the general partner, the other one is the limited partner. General partners do the work, limited partners put in the money. Real estate syndication is an effective way for a group of investors to pool their capital together in order to invest in larger properties that they could not invest as individual investors. This structure allows investors to invest semi-passively. I will get to this semi-passively part of it later, while the sponsor handles the management aspects and day-to-day duties of the project. As investors, your role is to help the sponsor to pool capital to buy the asset, and in return you will receive a share or a stock in the property. That is, you will own a piece of that property. You will receive distributions for the cash flow of the investment, and you will also get the proceeds from the final sale of the property. One of the great benefits of investing in syndications is that it gives investors the opportunity to leverage other sponsors' expertise with their capital. This can open up doors to new asset classes, which helps diversify investors' holdings while delivering high returns. In my opinion, real estate syndication investments are great investment vehicles for physician investors. Why is that? 1. Investors like us who are doctors who have a full-time job, we lack time to acquire, renovate, or manage a property. So, in real estate syndications, the sponsors can do that. Number 2, as individual investors, we lack high dollar value or large amounts of money to buy large properties all by ourselves. So, pulling up the capital from multiple investors helps us get that property. Number 3, physician investors, our primary focus is medicine. We do not have in-depth knowledge about real estate investments, so we lack expertise to perform all the required tasks to keep the property up and running and make it profitable. In short, for a physician like me who wants to enjoy non-clinical spare time with my family but still seeks a high return on investment, it is an optimal investment choice. Now let's talk about components or members of a real estate syndication deal. As briefly outlined before, real estate syndications have two major players. One is the general partner. This person or team is also called a sponsor or a syndicator or an operator. The second one is the investor. This is you. This is also called limited partner. Now let's first talk about the sponsor or a general partner. Sponsor will do all the work in regards to this project. The sponsor has everything you need, all the knowledge, expertise, and time. But of course, they need your capital to buy the large multi-million-dollar assets and run the business. A sponsor, who can also be an individual or a team, puts together the whole deal and presents an investment opportunity to investors. They are the primary decision makers of majority of what happens with the project. When they present an investment opportunity to an investor, it is up to the investor to perform their due diligence and make a decision on whether it is a sensible investment opportunity. The sponsor of a project wears multiple hats. Usually, a sponsor hires a specialist team if necessary. A sponsor's team can include the following people: a group of real estate agents who can help buy and sell the property and locate a property, a syndication attorney to legally structure the deal, an accounting team or a CPA, a construction team or a builder who renovates the property or builds the property, and finally, a property management team to manage the day-to-day operations. Now let's talk about investors or limited partners. Investors like myself are always looking for stable and lucrative investment opportunities. Most real estate syndications take investments only from accredited investors. Make sure you're an accredited investor prior to getting involved in such projects. Please listen to episode number 2 to know more about what an accredited investor means. When I find an opportunity that looks interesting, I get in touch with the sponsor, learn about the opportunity. I do my due diligence, which is probably the most important step of real estate investments, and eventually invest in the property if everything checks out okay. In return for my investment, I own a piece of property or I own some shares of the property. All the real estate syndications are usually advertised as passive investments. I personally believe that these are semi-passive. You do have to do quite a bit of due diligence to evaluate the property and the sponsor. This takes time and effort. Hence, syndications are never a completely passive investment like stock market investment. However, after you invest in a syndication deal, it is pretty much a passive process. For a traditional real estate syndication deal, I have my own team to make sure I am doing all the right things. My team usually includes my personal real estate attorney to evaluate the syndication deal and recommend an entity structure or how to do the deal, my accountant or CPA to advise on tax strategy, and most of the times I also work with a veteran real estate professional. This varies, depends on the project. I consult with an expert in my social network to make sure that the deal looks legitimate and practical. To summarize, in this episode, you have learned about what a real estate syndication means and the components of a real estate syndication deal. In the next episode, you will learn about what an accredited investor is and if you would qualify as an accredited investor. Thank you for listening to the first episode of Physician Estate. To receive more information on real estate resources for physicians and to get updates on real estate investment opportunities with Physician Estate, please subscribe to our newsletter at www.physicianestate.com. Do not forget to take advantage of our 2 free eBooks, The ABCs of Real Estate Syndications for Physicians and How to Avoid a Medical Malpractice Lawsuit. Signing off for now, this is your host, Dr. Harsha Muley. Until next time, make wealth and keep wealth. Disclaimer: I am not a legal advisor or investment advisor. The content in this podcast is not investment advice. This is my personal blog, and all the content found here is for informational, entertainment, or educational purposes only. It should not be construed as personal investment advice.